Hello, everyone. Welcome back to our APAC Regulatory Insight series. My name is Jess, and I oversight the crystal intelligence business for Asia Pacific. I'm delighted to have you with us today for the part two of our conversation on crypto regulation in Australia. In the part one, we explore the emerging risks from crypto ATMs to gambling concerns. This is not just pertaining to Australian problem, but it's a global issue that a lot of regulators, policymakers are very concerned about. And of course, today we want to delve into a deeper policy question. What is shifting, what's next, and what has been mean for all builders and investors. And also, it's a pivotal moment at Australia now. ASIC has moved it to the Web3 Ventures block earners matter to the High Court. Just last week, this is the hot news. And today, we have Steve Vallas, CEO of Blockchain APAC, advisor to Austrac, ASIC, and Treasury. Steve, it's great to have you with us today. How are you?
Jess, I'm very well. Thank you for having me here. And I wouldn't say I'm an advisor. They've taken advice from me, whether they like it or not, but I offer opinions up to regulators amongst the other verticals.
Great. And before we start, we do have a poll, right? The first poll is that which best describe your role and the area of work? Steve, where is Australia now? I know that you travel based on your LinkedIn, posting. I follow very closely. Where is Australia right now, and what's the big picture? Would you want to share with our audience here?
Sure, Jess. I'll start with where we are, which is kind of end point, and then go back a little bit. I think in time to where we started. I think from a regional and a global perspective, my sense is we're a little bit less advanced than we would have otherwise hoped to be at this point in time. And I can tell you my experience in lots of different countries. Every country thinks it's falling behind. The narratives are exactly the same. Wherever I go, you always hear people say the regulators aren't doing what they should be doing, and government's not doing what it should be doing, and industry's not doing what it should be doing. So that messaging is consistent. But I think in relatively recent times, the amount of movement, largely driven out of what's happened in the US, has meant that we've fallen away a little, simply because we just haven't kept up with a lot of the attention and interest that's been generated in this space in the last 6 to 12 months.
Okay, great. So my next question is pretty relevant. Is that with your work with Austrac, ASIC, and Treasury, what's the top objectives for the next quarter or 12 months to come? Because we can see that in the Australian regulators, they are very closely monitoring the local risk that we just mentioned. What is the top priorities and objectives for these regulators?
So we're sort of like children waiting during Christmas for presents to be delivered here, Jess. We've been waiting for this long-promised consultation to come out, which turned into draft legislation and ultimate legislation, and we're still waiting. That's where we're at. I think it's been a long time getting here, and I think with best of expectations, we thought we would have been here by now. We thought we would have had something to look at, but that's still on the horizon. And in conversations with Treasury, they're indicating that it's imminent. Depending on whose version of the truth you believe at the moment, it might be out with something to look at in the next month, or, and I think with some greater degree of confidence, the position's been we should have something to look at before the end of the year. So I think we're down into this quarter where we're likely to see something substantial from Treasury, which I think will be a useful conversation. I think there had been an expectation that we would be seeing something from ASIC, particularly given the work that they did over the back end of last year and early into this year with InfoShare 225. But something you've touched on in our conversations, the fact that the High Court will now be asked to give some time to figuring out what is or isn't a financial product. And I have a view that it might impact a little bit what we see or don't see from ASIC, but that's also promised and in train. So those two things are happening. And then simultaneously, some other issues that are factoring in, they tend not to get as much attention, but Austrac has been much more active with respect to the space over the last 12, 9, 6, and now 3 months. And so they have a lot of priorities, which include the digital asset sector and the crypto sector. And last but not least, the ACCC is rolling out more of their scams framework, and tranche 2 of that framework involved digital assets and crypto. So a lot of regulators all pushing through pretty significant pieces of work, all roughly into the same time window. So it'll be a busy Christmas, early New Year's, I expect.
Great. So last week when I was in Gaza, the Global Anti-Scam Alliance, I was surprised to see that all the law enforcement, the private sectors, the banks, the Amazon, the big tech boys, MasterCard, they were part of this anti-scam projects and to combat and to curb this kind of scams. Can I ask, what is the situation now in Australia about scams? And also, what is the common misconception that you can hear from the industry? Can be related to crypto or not, but I just want to get the flavor. What is really happening in Australia now pertaining to misconception and scams?
I think if we go back 3 years ago, Jess, one of the things that's really shaped the conversation locally was the former Assistant Treasurer, Stephen Jones, when he was still with the Labor Party in the previous term of office, really had as a priority dealing with the issue that was scams. And in many respects, it overwhelmed all conversations. There's no one I'm ever in a room with who says anything other than it's a terrible problem and we need to be addressing it. But in some respects, I think the way it was handled in this first term of the Labor government, it became such a dominant conversation, it was very difficult to have any other conversations in those rooms. And people are not well equipped, in my experience, to distinguish good actors and bad actors because they tend not to understand the subject matter. So what you find is, if a conversation happens around crypto, it's crypto bad, it's digital assets bad, it's scams bad, and people can't say, well, hold on, this is a romance scam, or this is a pig butchering scam, or this is some other kind of scam. People just don't know how to distinguish it. So in the end, you find yourself having one conversation about scams. And if you are predisposed to thinking crypto as a topic is a bad topic, then everything is a scam. And so that lack of clarity, I think, hurts the conversations. And I think that carried through over an extended period of time. And the people I deal with, and when I'm in rooms, Jess, and we're in rooms together, it's not difficult to find crypto participants in particular who want to talk to this subject matter, but it's hard to find rooms where they're invited to talk to this subject matter in Australia. It tends to be a conversation that's been more siloed than it needed to be historically. And I think that's getting better, but it has been something which has caused, I think, some degree of challenge for industry participants who really want to be involved in helping architect a better solution.
So I'm going to ask this in another manner. Like the Gaza Alliance that, I mean, of course, Crystal worked closely with them. The DNA for that kind of event is that they always ask scam victims to sort of like share. Of course, I know Tracy Hall. I'm sure you know Tracy Hall as well, that she is from the victim from the love romance. I got to know her through Gaza. Is this something that, of course, these victims, they come out and they speak about their experience is part of education. What else the government is trying to also talk about educating the market? In our first panel with JP, Irina, and of course our friend Penny, we all agreed that we need to have more education. It's just not doing enough. What is happening and what's your view on that? Because I feel like this is a very important factor to get people educated before they get scammed.
Yeah. So one of the challenges, I think, Jess, is many people who find themselves in a position to talk about this subject matter don't think they need to be educated. People think they're beyond being scammed more often than not. And so the conversation never starts with them. And so then you're talking about educating people outside of that group. When I visit Singapore, and I perpetually see signs about scams everywhere, everything, there's so much yes. visible for scams. And it's not just crypto scams, it's scams of all sorts. That kind of general advertising, I don't think that's been sufficient enough locally. And so that's something that it just has to be pervasive. I think we saw a dip in statistics around scams for a period of time and various reasons to attribute to it. But suddenly there's been a spike. And again, I know in Singapore, pretty significant amount, I think in the last 6 to 12 months now has been lost to scams again. I think these things will ebb and flow, but the education I think needs to be broad-based related to scams in general and the things to look for. People are getting better and better in understanding that when your phone rings and you get a random text message or you get a WhatsApp message, if it feels unfamiliar, that it's likely to be a scam, but they don't distinguish, they don't part out that challenge. with understanding what a crypto scam is or isn't. I mean, you and I were chatting, I think, before we jumped on air, where I told you there was a friend of mine, well versed in all sorts of business environments, who sent me something about a crypto story, and it was absolute rubbish. But she didn't know to know it was rubbish. And in all other aspects of her life, she's high functioning in a commercial and a financial sense. But in this context, she couldn't distinguish because she just hasn't consumed enough of that information. Yeah. So that's one of the problems. I don't think we do broad-based versions enough. And from an industry perspective, when people talk about what the industry should do, Jess, one of the challenges in what the industry should do, this is language I'm using deliberately, what the industry should do. The problem is there's no industry in this monolithic way. And most of the time when you're talking about businesses, if you're talking a payments business or a banking, when you say the crypto industry, are you talking about exchange? Are you talking about brokers? Are you talking about custodian, trace businesses? The breadth of the topic and the breadth of that description means the coordination of all of those cohorts is almost impossible. So I think there's a very high expectation of what industry is doing, without a real understanding of which parts of the industry should be co-opted and is happy to participate in this conversation. So that's something I think that we don't look at enough.
So actually, a lot of these victims that got scammed, a lot of them, from the data perspective from Gaza or maybe local police or regulator, they do not have all information. At most, maybe a fraction of it, or at most half of it. Reason being is that people are too scared to share and they're embarrassed, especially you're involved in a romance scam kind of. You don't, because it's emotional and people prefer not to share openly. So I just want to ask that, with all this, do you think that there's enough consumer protection policy coming out to protect these people? Because you can be scammed and then you might choose to not share with the industry or the public, but we can see that there's a growing trend on scams. Make you use it for crypto or not, or traditional, phishing campaigns, multilingual phishing campaigns. What is the regulator really doing as a policy matters? Consumer protections, are they actually doing something to protect the people, or it's just another statistics on a scam data? I just want to ask from the Australian perspective first. Yeah.
Just from a regulatory perspective, I have sympathy for the regulators trying to do what they have to within their own remit. That is all consuming. At the moment, ASIC has consumer protections it focuses on. The ACCC has consumer protections it focuses on. Austrac has protections in place to aid consumers. All of them have this requirement to protect consumers. It's the coordination challenge where this all falls over. And I think you and I have been in a lot of really great rooms, and you have this enormous amount of domain experience that comes together, invariably at a conference or something similar. There's enthusiasm in that room, but there's nothing once that room comes to an end to drive that conversation forward. You're asking individuals, you're asking businesses that don't have the resources to do it. So we have the right conversations in different rooms. We occasionally have those right conversations together, but the challenge then is how do you resource that outside of those environments to keep that coordination going? And one of the other critical things, which has been something I've communicated over a long period of time, is we are too linear in the way we're trying to solve for this problem. It's the trap that we fall into with most things we do. Let's meet quarterly or bi-monthly. Let's meet with this particular cohort. There's no nimbleness in the way we're doing. Rather than saying, you know what, let's meet 4 times in the first month, 2 times in the second, and not at all for 2 months, if that's the best solution. But instead we find ourselves in these conversations where we put it in a straight line. We try to deal with this in a straight line, except the problems we're solving for don't operate in that sort of straight line. So that's, I think, for me, a functional observation. And I think outside of Australia, Jess, this is part of my experience in the last year and a half, as conversations have shifted away from some of the Australian initiatives. In rooms that I'm in overseas, there's a greater representation of a broader range of people than there is at home. And part of that is the geography that we find ourselves in. We are a landmass detached from the rest of the world. So most of the time you're calling on the same people. But when I see you, as I will, in a variety of jurisdictions over the next 3 to 6 months, you're finding the best of industry flying into places, whether it's Singapore or Dubai or
Hong Kong.
Hong Kong, they're all flying in, and you're getting the best of the conversation. And it's a real challenge in a localized way. And this isn't just an issue that's specific to Australia. It's a lot of other jurisdictions which are not quite there, either geographically or because they don't have a mature enough sector. You don't get that experience. But it feels like you do, Jess. This is one of the challenges. If I ask most people locally if they feel like they're staying across the detail, the answer will be yes, because their version of the detail, they're across. But it's a very different thing when you sit in a room in Washington, for example, and listen to the biggest payments businesses in the world and listen to the biggest sort of representatives of regulators and the FATF types and the IMF types in the world. It's a very different kind of conversation. We just don't have the benefit of that conversation as often.
Yeah, I told my boss that APAC market is actually quite close loop. Like my Dominic is my counterparty in US, and my Sweat is my counterparty in Europe. The moment they talk about regulation, roughly they can have a more transparent, uniform kind of regulation across the region that they market or they are managing. But when it comes to APAC, I'm managing 14 countries. I'm almost dealing with 10 different countries, different languages, and to knock on the doors and to get data, that is really, every day that's my challenge. So when it comes to like getting data, scam data, crypto scam data, fraud data, that's already a very challenging part, as you mentioned. Okay, that we have enough of this local regulation. I want to talk about what had happened with this blog earner. I want to know, because I know that you post something on LinkedIn, I pick it up, and because I'm not a native Australian, I'm very interested in this case. So this ASIC that confirmed this Web3 Ventures patent and blog earner have taken it to High Court. And of course, this is more than just a legal technicality. It sets through how crypto products are being classified in Australia. This is going to be a landmark case, because if you look at any precedents, they don't have much of these cases to talk about. Is crypto, what kind of financial services or product they are classified in? And because of this gray area, we are now into the era of scams and fraud. People just don't know, like your opening. People don't know what they're signing up for, and therefore they have either be a victim or become a hero for the anti-victim part. I want to know about this case here. Do you mind to share? I'm sure you're doing some research on that.
Thanks, Jess. One, I think it's a very important milestone. I would have been happy if it was a conversation we were having 2 years ago, because it would have made a lot of things easier. The context around it is, in most jurisdictions, a conversation about what is or isn't a financial product, is it a security, is it a commodity, those conversations have been never ending. And the truth is, in most jurisdictions, they haven't really come to an end in a legal sense. They've come to an end because, in the US as an example, a lot of the momentum shifted because of change of government. So that functional exercise, which is almost a first principles question, what is it or isn't it, is a conversation we've been having for a long time. And so that we're going to have our day in court. Now, when I posted that on LinkedIn, I had someone who complained that I was being too positive, and just I was really confident and conscious of the fact I didn't say good or bad. I just said people will have their day in court, and there will be a determination which allows some forward movement. And for some people, that will be a bad outcome, and for some people, it'll be a good outcome, but it'll be an outcome. And so, to your point, the fact that we're getting to a point where we can get some clarity there, it'll make a really big difference, because either way, ASIC has a wide variety as a regulator of tools available to it that it can apply. But the absence of certainty around which ones it can apply legally is problematic for everybody. You've got a lot of businesses that are waiting for all sorts of regulation to be finalised to make a decision about what the economic opportunity is for them in Australia. And one of the fundamental questions is, with what version of confidence can you move forward? And this will give people some confidence. And from my perspective, I think about the outcomes that ASIC gets from here, and there are 2 or 3 different scenarios that play out. It might be the case that this court says almost exclusively, this is a decision which accords with ASIC's view, in which case ASIC has a clearer toolkit to operate with. Their view is affirmed, what they view or don't view as a financial product is accommodated, and they move forward on that assumption. That'll provide a certain degree of certainty. It might be the case to say, no, it doesn't resemble that. at all. And then the question becomes, well, if it isn't a financial product, how are we going to deal with it? And in that regard, it becomes a really pressing question for government and for Treasury that says, if it doesn't fit, we know these things don't fit in a lot of respects, and I'm being binary in the fits doesn't fit example here, then the question becomes, ASIC's view has been expressed. The court didn't agree with that view. So what view do we want? How do we want to treat these things? So that could put some significant pressure on government and on Treasury in a really short period of time, because it'll force a fundamental rethink if we don't proceed on the assumption that it is what ASIC or one of the other regulators says today, then what is it? So I think we'll find ourselves in a particularly interesting window into next year. And so that's, for me, the importance of this case. And to your point, there's no higher court in the land, so this decision is the decision. So at least we'll have some confidence underfoot here about how we should proceed. My challenge around it, Jess, when I zoom out of the Australian context, is we will get some clarity some point in time. Depends how long it takes for them to hear it, and then for them to have a judgment handed down in relation to it. What happens in the meantime? If we zoom out and see what's happening in the US and the UK and a variety of other jurisdictions, what I'd hate to see is we go through this academic exercise of determining what it is or isn't, have absolute clarity, but miss an opportunity to say, well, either way, we thought there was a way through, but we've ended up holding ourselves up to make sure this was the perfectly clear case. Because in Australia, I think a year or two ago, a couple of years ago, we had a token mapping exercise. Treasury ran a token mapping exercise, and there was great hope that Treasury would come out and say, this is or isn't how we view these products. And in the end, it became an academic exercise of how we may or may not view these things. It didn't serve that purpose. So we've been in the loop here for a long period of time. So come what may, I think we'll have much greater clarity when this matter is finally heard.
So I come from the era of security token, utility token, the ICO. It explains how long I've been in this industry. And when I first entered there as a compliance person, we talk about how we test. That's the only rule that we can look about. And then all the Singapore lawyers that I know, suddenly they're flooded with business here. So with this case here, or if there is more, not talking about an academic exercise, but say that if it's just it's more clarity, more thought process in terms of the clarification about what is a crypto products, what is the wider implication for builders and investors. I'm not talking about just Australia, because at the moment I can see that a lot of people, they just don't understand to draw a thin fine blue line. Is this a crypto investment or just a scam projects? They don't understand. So of course, scammers, fraudsters, they know. They are leverage on that to say that because of your ignorance and there's not much case studies or precedents, I mean, you can't find out even you do any due diligence. I just want to know if this case is going to be more explicitly discussed in court and not an academic exercise. What is that a wider implication for investors and builders as a whole? You can talk more than just Australia.
Yeah, just so for me, although it's going to happen in a court, it's not an academic exercise, because ultimately the determination is the determination. And so I think the bit that it means, the functional part at the moment, and I'll go back a little bit further than at the moment. When I was involved in the space 6 or so years ago, we'll talk about how this should or shouldn't be regulated. The conversations were self-regulation is sufficient, the rules don't apply. Then we moved into a bespoke regime. We have to do everything from scratch. This is so different. And then it was AFSL modelled, so the Australian Financial Securities Licence version, the model on that. And then it was AFSLs, and it's also markets licenses. So we've crossed all of these categories as a potential option. Some people have committed to some or other of these. We're still left in a position where nothing quite fits. And the info sheet sort of research that was done and the consultation that was done with ASIC was very helpful, because it ran over 3 months, Jess. And the truth of that is we got to the end of it, and there were lots of views about things like the kind of training that a responsible manager who's required under an AFSL is going to need, or what we have to acknowledge is an appropriate skill set. Challenges with things like insurance, which have been an interesting difficulty for businesses to deal with. How do we deal with that under an AFSL regime so you've met your criteria? If you've got a product, what disclosures are you responsible for? Also things which don't quite fit. And so those questions are where the challenge lies. And if you don't like the space, generally speaking, you have a simpler view. It fits, just shoehorn it in. And if you really like the space, you say, I really want to comply, but I'm not sure how this works because there's a difference in the product. So that clarity is driving people either into the jurisdiction or away from the jurisdiction. So the reality of
exactly
the situation I find myself in, which is why I started with the general tone and tenor, which is we've drifted away from this. I'm not speaking to people, just speak to a lot of lawyers every single day of the week. It's unusual for me not to speak to a lawyer. So day after day, and people aren't saying to me, this is a jurisdiction you can have confidence around setting a company up in. It's a terribly sad thing for me to see after so many years that people aren't saying the first place I should consider is Australia. They're not. They're saying the first place I should consider is not Australia. And that's because of this grey zone around the rules. I think what people will find, they're more resilient than you think. Whatever the decision is, some people will stay put, some people will choose to leave, and some people won't care. And so it's the absence of clarity, I think, that is the problem from an industry perspective. And where can you fit in? And when I look at something like stable coins is a good example, Jess, which we you and I speak about often. The race for the right stablecoin regime is in some respects outpacing the reforms that different jurisdictions are rolling with. Australia is still working through that process itself.
Yeah.
The US has largely arrived at its position. The UK tried, hasn't worked too well. They'll revisit it. MiCA has a stablecoin regime which is spluttering. And so getting it right in a technical sense, getting it right in that legal sense is an important component. But the market is deciding at the moment that if it's not a US dollar backed stablecoin, then it's probably not of a great deal of interest. So what are we doing in relation to that? So this is one of the challenges of the way the theory and the reality are intersecting when it comes to the business opportunities that people have in front of them.
I will say the market is very sensitive. If you are very prone to like self-regulation and suddenly you have this set of rules to say that now it's mandated, like MiCA, you take it or leave it. Binance have to change the strategy because they want to stay input with the European market. They have to change. I always say that AML is not something that is optional. If you want to scale your business, you need to be scalable in your AML processes. You can't scale, you know what's going on. All the big fines, all the scandals are out there. So stay in the same topic. I would like to know that what has materially changed for reporting entities for Australian regulators in terms of registration, monitoring, and typologies. Penny from our last panel and also JP, they mentioned that, Australian regulators don't have sharp teeth. You just have to comply, put STR in, you just have to share your intel. That is a very harmonious kind of two-way communication. That's it. Unlike the US, they are a little bit more aggressive in terms of like, you're not under-reporting, that's going to investigate you, things like that. I want to know what had materially changed for reporting entities for now, registration, monitoring, typologies. What's your observation, Steve?
So I think I'll talk about the Austrac shift there, Jess, because it's been pronounced for me. And I think it's been pronounced because of a variety of factors, some localized and some international. I think the process of registration as a digital currency exchange was relatively straightforward over an extended period of time. There wasn't a lot of issues that were surfaced. There weren't a lot of organizations that were asked to hand in their registrations. For the longest time, it was just a process you went through. It was relatively light touch, but I didn't ever hear that there was a major issue with it. There weren't a lot of people charging in. But somehow we went from a process which was relatively light touch, didn't have too many bad actors identified, but we've ended up in Australia with over 400 registered DCEs. And that's a big number in a relative sense. And so there's a particular metric there. I sat in a number of meetings where when people talked about the relatively short period of time it took to become registered, I could hear that as a signal which wasn't well received, because sometimes that you don't have the follow-on question, which is not how fast was it, but was it effective and did it do its job? So that sends a different signal to regulators, and it also sends a different signal to government, because the question then becomes, how did you possibly get registered so quickly? And the answer might be, well, because you met the criteria of it, but that's a very difficult conversation to sort of surface. So where you flash forward to where we are today, and Austrac recently has said there's concerns about the use of these licenses, particularly when they become dormant as well, that there's some risk of fraud and scams. So we're going to get some people to hand them back, or we're asking them to hand these things back. We'll be more diligent in assessing them, and then if we've got issues, we'll manage those issues, and the numbers are expected to significantly come down. And again, I don't think there's been an enormous change that warrants it so much that we've probably had too many, and similar to the ATM conversations, Jess, that you and I have had, that suddenly Australia had 1,900 ATMs, but that means it went from 1 to 1,900. Like, it wasn't the case that overnight suddenly 1,900 of these ATMs sort of showed up. So that's one issue that's specific to the Austrac issue. Second one at the moment on the Austrac side has been this tranche 2, this sudden massive uplift in the number of reporting entities for Austrac. That poses for any organisation a great many challenges, because so many people have now been brought in under the umbrella of the suspicious matter reports. How you do that? They didn't suddenly triple the size of their workforce to be able to accommodate it. There's a lot more work that needs to be done from Austrac's perspective to deal with so many other businesses, and businesses similarly have to meet those requirements. And so in between those two things, the question is, what's the communication channel going to be like with these existing stakeholders? Yes. How can you possibly be as engaged or more engaged if your workload has suddenly increased enormously? So I'm seeing these challenges there, and I think what's been reflected, and I think Brendan Thomas, the CEO there, has been very public, and I think it's been one of his really useful tools for the organisation. He's been very public about what they're doing, and so because you can't get around to everyone, you have to signal strongly into the market, and they've been signalling very strongly to say, we're looking for bad actors, we're looking for people who aren't meeting their obligations, and this is absolutely not specific to crypto. If you look at the sorts of things that Brendan and Austrac have been talking about in recent months, there are a lot of high-profile cases saying that they are making sure that people do what they're supposed to do from a reg. So that's been a material shift in a relatively short period of time, Jess.
Yeah. How about the data sharing across cross-border cooperation? Because criminals are operating in international level. They are very prone to like flying here and there, and they try to be, if you can't find me, if you can catch me, just find me here. So what is Austrac way of doing the cross-border cooperation and also data sharing? I'm sure if something is happening and it's suspicious and unusual in nature in terms of transaction, they need to share across to, like, say, wherever country that involved. That is why scam compound is so hard to be trailed in court. Working with international law enforcement, just doing all these like task force meeting with them, it's very hard to get into this because first, 101, they don't have evidence. Evidence is lacking. And of course, whoever is trying to make it as a complaint, the member of the country need to make a very important statement, and they should have a nexus of their own citizen that they are victims. How is Austrac trying to do the cross-border cooperation? Because criminals now is operating in transnational crime, no longer jurisdiction-based, because it's easy to get them to fly around. So what's your view on that?
So I'm coming at it from two separate directions, Jess, and Austrac's in the middle of both of these conversations. The challenge on the law enforcement side that you and I both see, the incredible sympathy I have for poorly resourced law enforcement teams. Even after all these years, I go into rooms and there are so many internal champions who recognise what this looks like from a law enforcement perspective, and they're not well resourced. And part of the reason they're not well resourced is the subject matter is still not particularly well understood. So I see this enormous deficiency in the amount of time and effort and resourcing that goes in at that level, and whether that's federal police, state police, and this cross-border engagement, it's underweight where it needs to be, and it's very hard to shift the needle on it to say you need to do it, because the truth is, with so many of these things at the moment, a lot of these scams, it's too late. These assets are gone. The process of getting back is incredibly difficult. So you have to make a case that is put more resources to something, which is likely not to have immediate success. So that law enforcement challenge, it hasn't been addressed. And across different jurisdictions, I find, again, well-meaning conversation, but I found them here in Australia when I meet with law enforcement, often they will pay for their own involvement in things because they're trying to upskill. So there is that law enforcement challenge on the one side. The other side of that is and issues around things like the implementation of the FATF's travel rule. That travel rule conversation yes, that you and I have been joyfully involved in for years. It's gone around and around and around. And you're talking about the implementation, you talk about information sharing, and a trend across some of these products is these closed loop networks where you're asking him to create a closed loop environment. Now, the challenge of doing that, of course, is you need to go to businesses, encourage them to be part of a closed loop. That as a business development exercise is an enormously difficult thing to do. And then you layer on top of that the challenges of implementing the travel rule. I mean, I've sat with regulators who have said, yeah, we're going to implement it or we're going to apply it. It does apply, but you are not sure if the tech works yet. So we've had this difficulty, which is FATF's pushed on one side. The solution providers say it almost fits, but it doesn't. So we've got parts that is the leakiness of these respective conversations. And then you have Austrac in the middle that is trying to make sure that these things are implemented so they see these flows more effectively and you understand who all the counterparties are. And then you have the technologists who are never brought into these rooms or rarely brought into these rooms who say, the tech doesn't work. We can't identify this thing or we can't do this with the level of confidence. And what would you propose we do? So those conversations, again, come back to this coordination challenge, Jess, which is we know when things go wrong, you need the police there in all guises, and we know that the businesses need tooling that allows them to do these things, and we know the regulator sits between these and says on both fronts, if something bad happens, at least we know we can go get it, and then before it happens, at least we know that the necessary risk and compliance. But there are so many gaps in that process that it's a real struggle to go into these rooms and watch these people who do want this earnest outcome. But taking what I just described, that complexity, and putting it in a room and saying to someone who is in another department of government or is a politician, here's what we're solving for. I think it's a very difficult conversation to get any traction with.
And also, the data sharing that you're talking about is PII information. You have certain liability if you just share it not within a closed loop as well. And people will use this as another shield to say, I'm not willing to share. Really I understand your pain point here, because as I'm not a technologist, but I work for a tech company. When we brought in for tender, we have to go into a very specific, all these tender specification. We did not think outside the box because you have to comply with the tender documents. It's the policymakers that design the whole part of it. They think about, we curb this risk by designing this policy, and then we bring in technologies to come in to gather information as an aggregator, share it within a safe environment. But they ignore, is this curbing behavior? Because the law, the whole criminal law is to regulate behavior. Are we regulating behavior? And this is the end result. Of course, if it's really regulating, we don't see that much of scam numbers are at a rising trend, right? Of course, they have curbed in some ways, but because things are moving so fast, I believe we need to be more active in doing that. I really think that the travel rule part has reached its limitation. I feel like the data is not sharing as efficient as possible. Like you say, it's closed loop. Before we go to our world tour, I just want to ask the last question pertaining to the Australian regulation. Is the Australian Prudential Regulation Authority, Australian Taxation Authority, ATO, and ACCC, Australian Competition and Consumer Commission, are they intercepting with crypto right now? Because like Malaysian law, they are super interested in understanding who are the DeFi people. They want to know who is the shadow economy or the gig economy. I just want to ask, are they involving in crypto business now?
So I'll start with the Australian Taxation Office. There was a review done a little while back. Nothing really came out of it that changed the rules. So effectively, the way the ATO view the rules is the way they continue to view the rules. Largely, it's a simplification, but that's the case. What has changed, and this is not just related to the Australian Taxation Office, but I think the OECD has come out with CARF, which is this information sharing. The information sharing element across taxation agencies around the world has significant traction, and it is information sharing, so there's coordination. So that's been the biggest shift. Treasury came out last year, I think, with a proposal where they talked about the implementation of the OECD CARF sort of approach. And I think globally, my understanding is that's had a lot of success, a lot of traction, because that coordination makes a lot of difference to following flows around the world. So the ATO, the primary thing I've seen on that front has been in that regard. With APRA, I think APRA's interest here has grown, as has the interest in these larger financial institution involvements. And I think when from a distance it was some crypto conversations, it didn't look like it was going to be a thing. And now we move forward to a stablecoin conversation with people talking about we're re-dollarizing the US, we're de-dollarizing a bunch of others. There are all sorts of really significant stability conversations, which I think now will come to pass. And it's funny, Jess, because when I used to sit in rooms talking about this roadmap that was developing in front of my eyes, there was a general sense this will never be serious, so we don't have to worry about serious things. That was a lot of conversations that I was having. It's always been the case from my experience that APRA has been paying attention to what's been happening on the regulatory side, and most obviously they've been drawn in now because of stablecoin conversations and watching the Prudential requirements. But it is the combination of the scale has now made a difference, and they've been less visible, but I think with good reason. I think more obviously people have ASIC is a little bit more front facing. Treasury is often front facing, so there's an expectation you'll see APRA less, and that's been the case. But my understanding is they're very active now in trying to figure out what the implications are for their key stakeholders and the industry participants that they have to look after. On the ACCC side, it's a challenge, Jess, because I think from my perspective, this schemes framework is a good example. When I was engaging with the ACCC earlier in the year, they weren't up to, I say up to in air quotes, they weren't up to the crypto side. The first part of the scams framework focused on social media companies and a variety of other priorities. The point I made at the time was the industry is already up to it because the scam stuff is pervasive. And so this is another example of that linear conversation. Do I think they've engaged enough? I don't think they have, because from their perspective, they had a lot on the to-do list. And although the conversations have been having, I don't think they've intersected as much as they could have with the sector. And there's all sorts of things that have worked. There are fusion cells. There's a scam element within the ACCC. They're all useful, but from my perspective, there hasn't been the integration that there could have been. But I think over time there necessarily will. But the longer this framework is in existence, when we get to that bit officially on the to-do list, it'll draw this conversation in. So those different regulators are being drawn in to varying degrees. But this is one of the challenges of the Australian ecosystem. When people talk about regulators in a variety of other jurisdictions, you're usually talking about a primary regulator, maybe one, two, or three. In Australia, we seem to have collected the set, Jess. So there's so many regulators you could talk about that it's a lot of complexity when everybody is siloed. And I think that's one of the challenges that they've had to overcome in this technology in particular, because when we're talking about a blockchain or crypto, you're saying it involves payments, it involves scams, it involves all sorts of consumer protections. It involves lots of different parts of each of these regulators in a way that I think it's taken a little bit of time for everyone to get their head around. But it seems like we're there now because everyone's suddenly taking it seriously.
Okay, great. Enough for Australia. Let's go for our world tour now. Let's start with our closer to us, APAC. Well, if I talk about Singapore, Hong Kong, the only thing we think about is stablecoin, right? It used to be Singapore is like the crypto hub of Asia. But of course, back in 2022, they make more regulation in opening up. And I feel like the recent stablecoin, which is this month, is very important. They're submitting all the application for stablecoin issuer. What else, or what is your view about this crypto market in APAC? You share first, and I'll share some of mine. Let's exchange notes here, Steve. Yes.
Yeah, it's good. This information sharing is useful. This is our cross-border information sharing, Jess, as well. So I'll go 2 by 2 and then other. And it's almost a hot or not. Is the subject of the jurisdiction hot or not? And I think two useful comparisons at the moment are the Singapore conversation relative to the Hong Kong conversation. And there's definitely been a shift in the last 6 months. And I think it's a predictable shift because, to your point, MAS has been more consistent and over a long period of time said, we're worried about things like extraterritorial application. We don't want businesses to be domiciled in Singapore and not do things in Singapore. Are they here because they're helping, or are they here because they're using us as a base? So that conservatism, I think, is very clear. And I think jurisdictionally, that message has been heard. And so in a crypto sense, it means there's been a little bit less interest in Singapore in the conversations I'm having. In an institutional sense, I think they're moving along as they would hope. So that's a little bit less noise around that side of it. On the Hong Kong side, I like you, have been fascinated to see how much noise is around the stablecoin conversation, how quickly that's accelerated. But before the stablecoin conversation in Hong Kong, it felt like, going back to the start of this year, a general sense that there was more momentum in that market than there was, say, 12 months ago. So that's ebbed and flowed. So Singapore down a little energy-wise, Hong Kong up a little bit energy-wise.
Yeah.
On the Japan and the Korea conversation, I have to say, I'll be in Korea in a week and a half or so. I'll be heading there for the Korea Blockchain Week. I heard Korea mentioned. I heard it mentioned again. I heard it, and now I'm hearing it all over the place from different corners. So there's been a step change in people's interest and awareness of the Korean market, and I think that's a byproduct of a variety of things. But largely, there's been a change of government, I think, which has given people a reason to revisit the jurisdiction. It's always been the case. It's a very active crypto country. A lot of real sort of noise and energy around the space there from a few years ago. And I think the shift in the US is generally regarded as having had an impact in what's happening in that general direction. So those three things have suddenly elevated the conversations around Korea. And people are inquisitive. I mean, the reason I'm going as well, having never been, is to see what's happening there, to get some experience on the ground. So that conversation has been a pronounced change in my experience, and I'm watching people descend. In the same way, then in Japan, there's been a little bit less interest around there. There is some conversation about stable coins. There's some conversation about regulatory frameworks, but it feels like there's been a little bit less interest there because there's probably been a little bit more interest in Korea. So of those four nations, yes, I've seen that shift. The trend that I'm seeing in sort of the ASEAN group as a whole, though, is one towards localization. And this is a trend I'm seeing globally as well. I think there's enough of a recognition now between key stakeholders within jurisdictions, whether that's the governments, it's the regulators, it's the industry participants. There's a sense that they really do need to start picking their winners. And so it's become much more obvious that they are now saying, what kind of partnerships need to be formed? Who are the key industry players? Who do we support here? So that localization, I think, is a byproduct of what's happening in some of these other bigger markets. That's my experience in the Asian region.
I would like to add on to your point here. There's an undercurrent of all these FAFs coming along, Taiwan market, Indonesian market, Vietnam market, we spoke before, and potentially Thai market. They are forming like a merger and acquisition undercurrent on the way, because the government is shifting their policy and also the requirement for setup for being a VAS. You need a mega contribution, pay up contribution. I'll give an example. In Vietnam, it's USD 400 million mandated for the crypto license. And of course, you need these big players like a telco company or like a big conglomerate, the local conglomerate, and they may be partnering with those exchange who has already been having some reputation, good reputation, to merge and become mega VAS instead of just the startup VAS that we've seen like maybe year 2000. This undercurrent is forming, and of course you can see that the sovereign funds are flowing in. Maybe perhaps a political person will also involve into the management team, and you can see that maybe this is a good thing. It can be a bad thing, but I would see what is going to happen, because we have seen so many pump and dump customer. They have all these CBT, criminal breach of trust customer. They bring customer funds around and then they just leave. And then, oh, sorry, my exchange is now gone with my... There's many cases in Singapore as well, okay? So I feel like this change could potentially be better for crypto, because you can gain more confidence for investors and for crypto players who genuinely just want to really invest and look at the crypto market. I'm not sure about this. What do you think about this before we go to any other region? Yeah.
No, I think it's absolutely what's happening, and the localization trend is a localization trend in two or three different ways, Jess. One of it is that the locals are trying to figure out, what works for the jurisdiction. So there is a much more serious sort of review of what this looks like. And I think a lot of it's been driven by the fact that in addition to a crypto conversation, which has been present for a long time, the question now is it's a stablecoin conversation, it's a tokenization conversation, it's a treasury conversation. All those conversations now make it look and feel much more familiar to traditional financial service businesses and adjacencies, and the payments businesses. Jess, I think the payments businesses, the likes of PayPal and Stripe, because they're now involved in this, that sends a strong message. It ripples across, pardon the pun on the ripple side, ripples across all these jurisdictions. And I think that's something which is definitely being felt. So I am seeing that the localization trend, which I think you look at jurisdictions like the UAE as another one, which I'll bring up.
Okay, go to UAE now. Yeah.
There's a mutual kind of interest there in the way they've approached it. I think the UAE has had a lot of success in the last year or two because as much as people have not been sure about the jurisdiction, there's been continuity in the fact that in Abu Dhabi and in Dubai, they've said if you want to do business here, you have to do business here. Like you have to be here. And so I think it's not been well appreciated that one of the critical things there has been you don't just take advantage of a regulatory environment. You have to put significant hires into the region. You need to put boots on the ground. You need to invest in people much more than this ticket to entry. And people have failed to appreciate how attractive the jurisdiction had made itself in that regard. Are you willing to up stumps and go and live in that jurisdiction? They've been really good at doing that. And so I think what you're finding now in this localization trend across a wide variety of jurisdictions, there's this renewed focus on, listen, we do want you to be here, but you've got to be here. Give us an MLRO, give us a responsible officer, give us people. And so that people shift, and this is the arbitrage sort of misconception. People are not, they're not taking advantage of this from a distance. They are having to put boots on the ground because the jurisdictions themselves are saying, we want to know that we have confidence in what you're doing. That is aided by people being here. Who do you propose to put here? So that's part of the other localization trend that I think has become much more pronounced. On the UAE side as a market, generating an enormous amount of interest, Jess. And it was the case that a year ago it was generating interest. I think one of the things I observed probably a year ago, there was a greater awareness through Asia about the UAE, and there was some awareness out of Europe, less so in the US. But I think the shift of focus on the part of the US government, this general sense that the Gulf region is of significance, has really awoken that part of the market too. So I think the US has also turned a lot of attention into the UAE. So suddenly you have the attention of the world. And when you and I are in events in the UAE, it's extraordinary to think how many people fly into that jurisdiction. Like it is the best of the world in all sorts of financial service settings, who are now descending on that market because they see economic opportunity. So that's been again a shift that people have not appreciated, has been so emphatic.
So you just recently visited Washington. Of course, I follow your LinkedIn. Share with us what's really happening in US. And I know that there's a lot of things is happening for the past 2-3 months. Do share with us.
One of the things I've been saying to people about the trips in the US, Jess, is people have started to pay attention too late. Because if you've only really paid attention in the last 6 or 9 months, a lot's happened. But it was important to be paying attention 24 months ago. And so the extended version of that story is a lot was happening 2 years ago. It wasn't much of it wasn't headline grabbing. The headlines were being grabbed by what's the SEC doing, what's Gary Gensler doing, what bad thing happened in the industry. What people didn't see for the longest time below the waterline was a lot happening at the state level. A lot of litigation was happening. Businesses were trying to find their way through. They were trying to be regulated in markets like New York through the NYDFS. So there was an enormous amount happening. It just wasn't grabbing headlines because the headlines were very obvious. So there was this pronounced build-up. And so people haven't seen that transition. So when I was there last year, well before the election, there was a sense that the momentum was really building. And this was before Donald Trump's influence in the sector had really been felt. So the building blocks were there. But you can't see that unless you've been paying attention for an extended period of time. And part of it was things like when I talked to people about Gary Gensler when I was in the US a year and a half ago, they would say, Gary's time will come to an end. And so this sense of it's always a very pragmatic approach in the US that they don't know what they get before or after, but it won't be Gary forever. And so there was this sense that people were building for a time horizon which went beyond the current regulatory administration. And so when the momentum of the US government now sort of started to kick in this regard, and a system that that happily allows people to support politicians in a very significant way, the super PACs and the like that were supporting, that's when people started paying attention. But it was halfway through the movie. But I'll tell you that since I've been to America 3 times this year. And each time there's more energy, and appreciably so. And when I was there in Washington relatively recently doing some work with the GBBC, it was extraordinary how much attention was being driven. I mean, the back channel conversations about the things that are going backwards and forwards, the machinations of Houses of Parliament, the drafting, all these things that, again, they're not headlines, but they are a reflection of how much energy is being put in to moving the ecosystem forward. And I've said to people consistently, as much as they think they're paying attention to what's been happening in the US, I said more is happening in the US than you think, because the headlines now that we see, if you go back over the last month or two, you don't notice the things that get said. There was a 401k announcement, no one noticed. CFTC and the SEC came out last week and said they're going to work together to talk about all sorts of things like perpetuals and derivatives contracts. No one even noticed this thing. Things that would have made news for a week or two a few years ago don't make the news at all here, because the headlines are just this constant feed of this is a sovereign wealth fund that's just invested, and this is a new Treasury that's just put in. All those things don't really make the news anymore because it's just part of a normal news cycle. So yeah, as much as people think they know, my advice to them on the impact of what the US is doing is it's even more pronounced than they would expect.
So I want to compare this with MiCA. MiCA has been there for about 9 months now, and we see a lot of people are going through the regulation. And what's your view on that? Just MiCA was the first one. It was a shock for everyone to say now it's mandated, it's a directive, or the member states are supposed to go in and to comply with certain level of AML. You can't pick and choose because it's a directive. What do you think about this after 9 months? What's the observation? I know that US have done quite a fair bit of this Genius Act, Clarity Act, and all this, but MiCA was there before this. So I want to know your view before we go to UK. I remember you say UK is your something that you like to observe, and nobody talks about that these days.
Yes, we could talk about MiCA for a long time. There's a lot to talk about on the MiCA side. What I'll say is, and I'll give you a relatively short timeline bookend. When I was there last year, when I was in London last year, MiCA was almost at its peak, in the sense that there weren't a lot of comparisons to anything else. People were marveling at the fact that the European Union had got this together. It was on its way. People could see what it was. It was a known quantity. It was almost the most attractive it had ever looked to people. And there wasn't a lot of comparison tool available because the US hadn't moved on its thing. UK started to move. So it looked great. There was lots of these things we said we don't necessarily like it, and it's reflective of the conversation we had earlier, where people didn't say necessarily we think it's a marvelous regime and we can definitely work with it, but they said, look, it is what it is, and we're going to see if we can work around it. So there was optimism in the sense that it was in market, it was functional. Let's figure it out. If I flash forward now 8 or 9 months, there's less of that view around it.
Yeah.
And part relates to, there are 2 interesting dynamics that are playing out at the moment. The registration process is different, obviously, to the licensing process. And what I think you found is a lot of jurisdictions started to break rank a little bit because they do want to be involved in this. So suddenly a bunch of jurisdictions that were happy to be involved in the registration process and ultimately will be responsible in the licensing process have emerged. So a lot of markets, I think, are finding an opportunity to lean in. So Malta, Cyprus, Lithuania, Poland, Austria, there's a whole variety of them who are not the biggest markets that you think of, but they want to play a role. So I think they've been much more active. So I think their relative role has increased. I think conversations around Germany and France, as an example, when I look at what's happening in Germany, a very small number of businesses have registered at the moment. They're largely related to institutional businesses that have cut over with their registrations from other things. So there's not an obvious source of natural interest around that. I think effectively it's just this reorganization around where you're going to be and how it's going to work in that jurisdiction, because the passporting will I think will work effectively. But we're in this middle point where everything's gone relatively quiet again, where people have figured out where should they be, where will they be, how will this work, and what does it mean for their business. And a lot of the people who are involved in these businesses, Jess, they're already in the European Union. I mean, it's not suddenly drawing a lot of attention from the outside. It's people who are already there. So you're rearranging the furniture in some respects. And so I think that's one of the challenges for the jurisdiction is people who have already been in market are now being asked to go through a variety of steps in addition to what they've normally done. So it's very difficult when you've been asked to retrace your steps in some respects. So there's not this energy that is, this is a new opening for a market opportunity, which I think some of these other opportunities might feel like. Here it feels like, okay, we're going to recycle some of these clothes, you're going to put them back on again, and at the end of it, you're going to be really happy that you'll get there and you will feel that, but that's the sense of the MiCA experience at the moment. And I think from a national competent authority perspective, you have ESMA's role in there, you have all these NCAs, a real challenge, I think, for jurisdictions to figure out how they're going to monitor and how they're going to coordinate. I don't think we're there yet. I think where we are at the moment is we're in the licensing phase. Who do we want to come in? Let's make sure there are no bad actors. So we're now back to being stuck in, I think, a window for a period of time where we're not quite sure what this ends up like. So it feels like we've been here before, and I'm sure we'll get through it. But at the moment, there's less energy as a result.
It's more clarity now because I think there's a lot of academic people are also involving in, and I do not want to just listen and look at the academic paper. I want to see that is this going to strive for a better community, safer, because we know that scam rate is going up. So to end the conversation, when people ask me again, what's the misconception about crypto the most, is that I think you really need to understand the industry more because the regulators, the policymakers, even business owners like exchanges or technologists, we are all coming together. That's why all the people talking about PPP, data sharing is getting more, cross-border transaction is getting more, but the data sharing is getting more. They have more secure portal to share data. And this is how we're going to end this conversation here with Steve. Thank you very much. It's been more than 60 minutes. I believe that you and me can sit down to talk about this in 3 days, guaranteed. And we can write a book on that. But we only have 60 minutes. Thank you for the attendees that attended this webinar. Do email us. This is the QR code to get more information. And Steve, I really learned a lot from you. I always feel like you are one of the most progressive policymakers. And I want to join your policy week next year. So Steve organized policy week every year, February. Do you want to talk about this just a little bit on the policy week that you're going to organize in 2026 to the audience?
Sure. So it'll be the third and final, Jess. So I've committed to that. The timing is important, but we also think this conversation should come to a natural end. It'll be in March the 10th of next year in Sydney. And the thing we encourage is a lot of people who are outside of Australia to come in and to share their knowledge with us. I think that's the whole point of that exercise. We put in front of regulators and industry participants and government representatives voices from other jurisdictions and different experiences, and it was an incredible experience for us this year. I think we stopped counting. I think we had 70 internationals. We thought we'd get 30. We got 70. So it was a really wonderful conversation. There's a website, policyweek.com.au. Jess, I appreciate you mentioning it. Otherwise, Rochelle would have told me, did you mention the fact we're doing this? And I would have told her I've forgotten. So thank you for the opportunity to say that's coming up.
Thank you. We will be part of it. Okay. Thank you so much, everyone. Have a good day.